Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. One of the things every investor should be able to do is make a bull case and a bear case for any investment that you're making. Today I'm going to make the bull case. Today I'm going to make the bullish case for Verizon and why I think the stock could move significantly higher and beat the market over the long term. But if you want to hear the bear case, just check out the link that I have right here because I'm going to do a video about that as well. So it's important to hear both sides of this argument. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And to get to the bull case for Verizon, I think the easy thing to do is start with valuation. This is Google Finance. You can see some of the metrics here, but the price to earnings ratio under 7 for Verizon, dividend yield over 7%, 7.4%. That is an incredibly high dividend yield and an incredibly low price to earnings multiple for a company that is very sticky, very profitable. People are going to be paying their wireless bills for years in the future. And there's an oligopoly in this market. In the US, there are really only 3 major suppliers for wireless telecommunications. And Verizon is one of them, one of the biggest and one of the most profitable. So that's really the baseline, is that investors may not be getting a growth company, because I think there's a good case to be made that the company's not going to grow all that much. But if you're getting a company with a price to earnings multiple under 10 and a dividend yield over 7%, this can be a winner just by churning out money year after year. To take that case a little bit further, I want to look at the company's income statement and where we should be looking as investors, because I think there are some real positives here that the market may not be considering. If we look at where Verizon's revenue comes from, there is services revenue, $27.2 billion in the most recent quarter, and wireless equipment revenue. So that's when Verizon sells you a phone, they're generating revenue from that. In the most recent quarter, that was $5.8 billion in revenue from wireless equipment. But if you look at the cost of both of those components, cost of services, $7.1 billion. That means that the gross margin from services revenue is in excess of 70%. Then look at the cost of wireless equipment, $6.4 billion in costs compared to $5.8 billion in revenue. So actually losing money on every piece of equipment that it sells. Now, there are fixed operating costs like selling, general, and administrative, $7.5 billion, depreciation and amortization. That's going to be the cost of building out the wireless network, buying spectrum, things like that. $4.3 billion. So these two you're not going to be able to change. But what you can impact is the wireless equipment side and the services side. If services are growing, which they are, Verizon could actually be a growth company. Gross margin could actually increase in the future as the company is spending less on building out its network. That's really, I think, the bullish case for the company long term, is that the costs that it has are fixed and are actually starting to decline, especially from a cash outflow standpoint. What we need to see, and we're starting to see a little bit of momentum on, is this services revenue number starting to increase. Now, it wasn't increasing year over year. You can see it was down slightly, but we've started to see some price increases, and also the number of subscribers is starting to go up from a slight decline that happened over the past year. So that tide is starting to turn for Verizon. I think that's very bullish for the company. If this is going to be a market beating stock, we're going to have to see Verizon add subscribers both to traditional wireless plans and to broadband wireless plans. That's a product that's really growing really rapidly over the past year. And I think adds to that potential operating leverage from the services business. That's really where Verizon is going to be able to grow the business long term, is by adding connections, whether that's smartphones or broadband customers or watches or cars. There's lots of opportunities to grow if you have the kind of network that Verizon has. That's why I am bullish on the company. That's why I own shares of the stock. There is a bearish case to be made. And like I said, I will make that in the video that you can link to right here. But I think at the end of the day, the valuation and the dividend is too much to overlook as an investor. What do you think? Leave your comments in the comment section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.